Good morning. Chirasi proudly presents annual information statement and income tax return. In our banking series, today we are covering income tax return and significance of annual information statement, or popularly called as AIS. Please note, I am not a tax expert or authorized by income tax department, but only I am sharing my experience. This AIS statement along with 26 AIS has to be perused before submitting your income tax return. Now that the system is open, we need to focus on these two returns before finalizing your income tax return. Particularly, AIS captures salary income, pension, professional and self-employment consultancy income, the interest received on deposits, including savings bank, and dividend received. In the case of expenses, it includes outward remittance and TCS recovered if any, repayment, total repayment made under credit cards, and also it includes if any jewels or any car or vehicle purchased in your name, and other expenses, major expenses incurred will all be captured in AIS. Everything is captured. And this year, one more item that finds a place in this return is term deposits purchased. Please remember, this term deposit purchased not only covers fresh deposits made in financial institutions, but also the existing term deposits which are matured and renewed. For example, a person retired some 10 years back and had invested around say 25 lakhs under the special fixed deposit scheme to get monthly interest for his living, as he has not opted for pension. Now, this 25 lakhs deposited in 2015 matured in February 2025. That is the financial year last year. He immediately renewed for a further period of say 3 years. After renewing for 3 years, within 10 days, he came to know that interest has been revised upwards by 0.5%. And only 10 days have crossed, he went to his bank, closed premature, and then again renewed under the new interest scheme for 3 years. Now, in the AIS, it is captured as 25 plus 25 equal to 50 lakhs term deposits purchased. Now, we need to explain this in our returns. Now, the question is, where to explain this in our returns? The only place available for you is under the exempted income. You have to mention this under various parameters are given. Under that column others, you have to select column others, and first you furnish 2015 deposit matured and renewed 25 lakhs. Again, one more column, add one more others and mention 25 lakhs deposited for 3 years, closed premature and then renewed to get additional interest 25 lakhs. That means you have explained that this term deposit is not a new deposit invested but the existing deposit. Similarly, some banks have introduced sweep transfer to short-term deposit. Whenever your balance in savings bank account exceeds 35,000, even a small amount like 3,000 or 5,000 is transferred to term deposit for a very short period till the 35,000 limit is above. But if this deposit is also included, then you will have to mention the total short-term deposit from savings bank transferred and recredited, so that this should tally with your AIS statement. Then you need not have to explain. If you fail to do so, that means your total income will show the actual pension received or the salary received. But under the expenditure side, there will be a question that you have invested under term deposits to the tune of 50 lakhs or 52 lakhs and so this will be taken up for further scrutiny. So to avoid that, please show this whatever the deposits that matured during the financial year 24-25, please mention it in exempted category. National Savings Certificate in the earlier years, say 2019-20, and that has come to maturity during 2024-25 financial year. Then you have two choices. Number one, the matured principal amount. See, for example, if you have invested 10,000 rupees, the principal amount which has matured 10,000 rupees should be shown as exempted income. The year-wise interest which you have included as other sources of income in the previous years, then you can show up to last year whatever the accumulated interest along with the principal amount can be shown as exempted income. The final year interest alone should be shown under other sources income from NSC. In case you have not shown the interest every year under other sources of income, then the second choice is you have to show the entire income as taxable income under other sources from NSC, and the principal amount should be shown as exempted income on maturity. The same treatment is for other investments also. Thank you very much. If any doubts, please give a message. I shall clarify.